from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
We are all unique. Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
It's unconditional, our commitment is, and the reason is that
runaway gas prices, runaway grocery prices, runaway utility bills.
we really need to restore price stability, get inflation back down to 2%.
I expect the upward pressure in prices will continue for some time.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance. This is the Early Edition. I'm Danny Berger in London, in for Francine Lacqua. Here's what's coming up on today's program. Unconditional commitment. Jay Powell again vows to beat inflation, while Fed Governor Michelle Bowman backs another 75 basis point hike. Stocks move higher and treasuries trim gains. And double defeat, UK Prime Minister Boris Johnson suffers heavy losses in 2 special elections as the chair of his party quits. Historic step, the European Union grants Ukraine candidate status while EU leaders devise strategies to weather Russia's gas supply cuts. Happy Friday. You made it to the end of the week. We're ending this week with some breaking data coming in on Germany's June IFO expectations, coming in much weaker than expected, coming in at 85.5. The estimate had been 87.4. Now, business confidence index, that also dropping more than expected as well at 92.3. 92.8 was the expectation. So that's not as big of a miss as the expectations there as well. Again, current assessment, 99.3. That actually beat the estimate of 99. So June IFO, I just want to make sure I say this right. I misspoke previously. June IFO Business Confidence Index, it was a miss, 92.3. The estimate was for 92.8. So again, a miss, not a massive miss. But again, this comes in the context of data disappointing throughout Europe. We had PMIs yesterday at a 16-month low. It's those recessionary signals filtering through the bond market. We are seeing some bond buying. You can see mostly up by about 3 bips in most of this market. So not as large as yesterday. However, it is clear that there's fear in this market. Germany, the German finance chancellor there, saying that he expects a Lehman-like moment if the gas crisis continues in the region. So there you go, some point moves higher on the indexes. Let's get a look at your overall market environment then. So those individual indices up, as is the main index. Europe Stock 600, that's up 0.8%. It follows on from a U.S. rally yesterday that is continuing in the futures index. It's this reevaluation of the inflationary story. As quick, nearly as quick as we put those inflation trades on, it looks like we're taking it off with the drop down in the commodities sector, with the do whatever it takes approach coming from the Fed. Are they going to be able to keep going, or is inflation going to come down, or is something going to break in this economy? Still, we are looking at 2-year yields. Those are bid yet again. The yields there lower by 3.5 basis points. We're looking at a pretty sizable move down of about 20 basis points in the 2-year yield so far this week. Some Fed rate hike repricing. It's happening globally as well, I should say. And again, a large part of that is the move down in metals. Copper, that's LME copper there, down more than 1.5%, down 20% from the high. So we're getting into this environment where we're pricing a recession in metals, in oil as well, despite a very tight market. Let's look at your overall European picture with the map. Again, it's mostly going to be green across the board, as we've been saying. It's not necessarily confidence in the economy that's driving us there. Instead, it is indeed this fear of a recession. But if rate hikes back off, if they're not as aggressive in terms of tightening, that's when we could see this rally filtering through and again picking up steam in the European session this morning. So to that macro story, the Fed Chair Jerome Powell once again promising to do all he can to curb runaway inflation during his second day testifying before Congress.
Inflation is happening everywhere now. More of our inflation is from demand, and we do have tools to deal with demand. Our tools they're blunt, but they are the right tools to deal with broad aggregate demand. We're very far from our inflation target. Our intent, of course, is to bring inflation down to 2%. Inflation getting back to 2%, get inflation back down to 2%. It's unconditional. Our commitment is that path has gotten more and more challenging thanks to the effects on oil prices and food prices. People do expect inflation to come back down to levels that are consistent with our price stability mandate. Without that, we're not going to be able to have a sustained period of maximum employment.
Meanwhile, Fed Governor Michelle Bowman adding to the hawkish chorus by backing a 75 basis point hike in July, as well as increases of at least 50 basis points in the next few meetings. Now let's get to some of the key market drivers. Our Markets Live reporter Simon White joins us in the studio now. Simon, thanks for joining. So, I mean, look, it does feel like this really big rethink in the markets. Is it a head fake, or is it sort of acknowledgement that the Fed is going to be able to get inflation under control?
I think it's a combination of things. I think the Fed has obviously been very hawkish right now, but in terms of how hawkish they ultimately need to be to truly get inflation back into a sort of low and stable regime, they're probably nowhere near. Like, very controversially, they probably need to be doing something like another 5 percentage points of tightening. Now, they're not going to do that, because right now the focus is on the cost of living crisis, so we're seeing some hawkish talk. But we'll move into the midterms. The political pressure will probably ease off in the Fed. By that point, leading indicators are telling you that growth is slowing, will slow more. Unemployment could well be rising by then.
Right.
And then I think we'll flip, and the pressure will be on the Fed to, back off a little bit. They're talking kind of like tough right now. But once they're in that environment, I think it'll be a very different situation. And you'll find that they are talking about easing. But it'll be way too early because the inflation problem is still there.
I was going to say, isn't that kind of the environment that they want to get to in a way? They want to bring demand down in line where supply is, and supply is extremely tight. So isn't that kind of like the scenario that we're looking forward to?
This is exactly, they'll get to this, but on an interim timescale. So they'll be lulled into a kind of false sense of security. Now, the 70s is an imperfect analogy, but the same kind of thing happened. You had way too easy settings. The Fed was hiking into the early 70s, but then we hit the recession. Political pressure then switched. They started to cut way too early. Inflation, it came off, but then it started to rise again. And the second half of the 70s was where it went crazy. You had the double-digit inflation, and it really laid the situation for the next Fed governor, Paul Volcker, to have the rate hikes that really solved inflation. But we're not there yet. We're going to have to go through these stages to get to that point.
Wait, so are you sort of in this camp, this idea that, okay, one of two outcomes, either the Fed backs off, they're not as aggressive, we don't get a recession, but inflation stays high, or they have to induce a recession. They need to continue to be aggressive, maybe 5%, in order to get inflation down. It's either or.
I think that they've probably got the mandate now for a shallow recession, but that's not going to be enough to get us back to the inflation regime of before. And I think that will lay the groundwork. We'll have to see some sort of serious damage done before you can have someone that's probably not Powell. He's probably fighting the last war. And someone else that can come along and really do what it's going to take. Now, it's not definitely going to happen like that, but as much as the 70s is an imperfect analogy, some things don't change. The behavioural aspects don't change. Monetary policy becomes more interfered by political interference. We're seeing that today as it happened in the 70s. So I think there's more similarities than differences, and we could end up in a very similar situation.
And part of sort of what helped add fuel to this fire in terms of a rally into bonds, that haven asset, was yesterday these really weak euro area PMI numbers. And of course, the ECB has an even more difficult task given that energy inflation is hitting them so hard, and the economy is already starting to show that signs of weakness. How much does that bleed into the global asset picture, this fear emanating from Europe?
Yeah, I think it's going to be problematic. I mean, we're already seeing it obviously ripple across all markets. I think now, unfortunately, markets are very kind of unhinged, if you like. They're much more responding to price. So levels are really important when it comes to markets. Technicals are very important right now. But the underlying picture is, of course, rates have moved higher. They're having an impact across the economy. And that will continue to happen. What I think will be interesting to note is the next potential shoe to drop, which hasn't really been come into the data, is the earnings. Earnings are still relatively elevated. They don't look like they've caught up. But every leading indicator you look at, whether it's like the fall in unemployment or the rise in, the fall in CEO confidence and sentiment, they all point to much weaker earnings.
And perhaps that's the reason why equities are rallying. I mean, I know they're rallying because the Fed expectations coming off, but despite recession, I really we have a viewer writing in that I want to ask you their question because I think it's really smart in this environment. Where's that inflection point where bad news will be bad news once again? Because if how we're trading in this market today is bad news of a recession, I mean, the stock market, it doesn't seem too bothered.
Yeah. It's that getting that inflection point is very difficult. I think we're going to continue in this environment for a while. I mean, look, the stock market generally goes up, and it always looks for reasons for going up. I think we could see the rally extend for the next, at least the next few weeks. But there's a significant number of headwinds that suggest that the actual proper low, the tradable low, is not yet in. Normally you see signs of capitulation, and we haven't really seen signs of outright panic. We've seen a lot of negativity, but we haven't seen the signs of outright panic.
All right, Simon, thank you so much. That's our MLive Simon White breaking all things markets down for us. Now, coming up, IFO Institute President Clemens Fuest on the German economy after IFO, I should say, business climate expectations and confidence came in below expectations. That is next. We also have some pictures for you coming from Brussels at the EU summit. Scholz is speaking there, talking about the need to accelerate efforts to diversify away from German gas, saying that they're well prepared for Russian fossil fuel import issues. We'll bring you the latest from the meeting throughout the morning. This is Bloomberg.
Kamu akan mampir hari ini.
Kamu? Oh tidak.
Wow, kamu harum banget. Stella Pocket dengan steam gel teknologi menghilangkan bau tidak sedap dan memberikan keharuman yang tahan hingga 30 hari.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. Now, German business confidence unexpectedly deteriorated in June. The IFO expectations index declined to 85.8. That's below the estimates of 87.4. Now, this is all happening as Europe's largest economy grapples with energy supply issues, rampant inflation, and component shortages. For more, we're joined by Clemens Fuß, president of the IFO Institute. So, Clemens, we have some numbers coming in here, some negative readings when it comes, especially, as you say, to the energy-intensive industries. Last month, you said there were no observable signs of a recession. Given these most latest figures, has that changed in your mind?
I think the likelihood of a recession is clearly increasing. There's a lot of pessimism about the gas situation. A month ago, the risk seemed smaller that Russia will cut off gas supplies. Now, gas supplies have been reduced. Nobody knows whether that's permanent or whether that will go down to zero, but the risk is rising, and that's why the energy-intensive sectors are worried. Energy prices are rising, and that also has an impact on the rest of the economy. For instance, in retail, companies seem to fear that as consumers spend more on gas, on heating, they will spend less on clothing and other things they buy. So the overall picture is rather gloomy.
Rather gloomy. So the odds of a recession are increasing, but are they beyond likely? Is it beyond 50%? How prepared do you think we need to be for that level of downturn?
Well, I think we need to see the timing. I think there are a few dangers of a recession this year because the gas shortage will have a strong impact in the winter. Now we are out of the heating season, so we're still okay. But if Russia does reduce gas supplies further, what our forecasts say is we will get a recession, but in 2023. Not before that. There's also some support for the economy coming from the sectors affected by the corona pandemic, like hotels, restaurants. So I think for this year, we are safe. But, depending on gas supplies, there may be a recession next year. And the likelihood currently certainly rises.
Well, Economy Minister Habeck yesterday said that after he raised, we're looking at a full screen of this now, raising the gas plan to stage 2 of alarm, that the risk of a collapse in the energy sector is there should the flow get disrupted more. He called it on a Lehman-like level. Is the risk that acute? Do you foresee a Lehman-like event in terms of the energy complex?
This warning is strong, but I think to some extent justified, because we need to see that if energy prices rise very strongly, one issue is, can the energy companies pass this on to the consumers? So the government has legislation that would allow that. But we need to be prepared. If the gas prices are passed on to the consumers, this will have a very strong impact on them, and that is a risk. But if we don't do anything, it may very well be that some energy companies collapse because their costs are rising and their revenues aren't. So it's a serious situation. We need to prepare for that, meaning we need to make sure that there are gas savings now, and that in turn does require higher prices for consumers, for manufacturing, so that they get the right market signals and reduce their prices.
You've started to see that concern ripple through businesses, be it in your latest IFO survey, be it just in some of the action of corporates, BASF cutting their production, BMW looking to buy electricity from third-party services instead of their own gas-powered plants. Concerns of a pullback in investment, is there that concern, and could it lead to long-term scarring in the German economy?
Yes, I think there is the risk, mainly because we have this very high uncertainty about what's going on, about in particular the gas supply situation. And the rising uncertainty means that doing nothing, waiting, stopping investment projects and waiting to see how these things develop gets more valuable. So that's what companies will do. They will reduce their investments and wait how this continues. So as I said, this may add to the risks of a recession next year. I don't think it's going to have a very strong impact now because investment is held back anyway by bottlenecks. Well,
Clemens, does that mean we're not at the point, or are we at the point where we should start to see gas rationing taking place? Are we there yet?
I don't think we are there yet, and we might not get gas rationing at all, but an auctioning system, which is being prepared. And that means if companies are ready to pay very, very high prices, they will probably not be rationed. But in terms of economic impact, it's very similar to rationing, because if gas costs are too high, some companies will just be forced out of the market.
All right, Clemens, thanks so much for joining us this morning. Clemens Fuss, president of the EFO Institute, speaking to us after the latest survey results coming out. Now let's get to the Bloomberg First Word News. With that is Alice Atkins. Alice.
Hi, Danny. Boris Johnson has suffered a major election upset, losing a formerly safe UK Parliament seat in southwest England. The Liberal Democrats overturned a 24,000 Conservative Party majority to take the rural constituency of Tiverton and Honiton. In a separate election, Johnson's party was beaten by Labour, raising fresh questions about the Prime Minister's popularity. The Conservative Party chairman also quit after the result, saying we cannot carry on with business as usual. The US Senate has passed a bipartisan gun safety bill, legislation hailed as the biggest breakthrough on the issue in decades. It aims to improve background checks, secure schools, and fund states to combat gun violence. The bill now goes to the House of Representatives. Just hours earlier, the US Supreme Court struck down a New York law limiting public handgun carry laws, a ruling that could mean more guns on the streets of big cities. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Danny?
Alice, thanks so much. Alice Atkins there. Now, coming up, we're in Brussels for day 2 of what has been a historic EU summit. Ukraine, Moldova, formally placed on the path to union membership. Topping today's agenda.
Take you somewhere new. Show me burgundy sunset sky. Let's fly.
Wherever you go in the world, one airline goes further to make it feel exceptional. Qatar Airways, going places together.
Agenda, energy security. We'll have more on that next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, it's the second day of a historic summit of EU leaders in Brussels. Yesterday, both Ukraine and Moldova were granted candidacy status for membership of the Union. Now, Georgia, at the same time, was told it could win the same status if it met certain conditions.
All three countries are part of our European family. We've never let any doubt about that. And today's historic decision by leaders confirms that. It grants all three the perspective of EU accession, and it lays down the path ahead. I think this is a moment of great satisfaction, and I'm very pleased with the leaders' endorsement of our opinions. There can be no better sign of hope for the citizens of Ukraine, Moldova and Georgia in these troubled times.
Let's get more with Bloomberg's Europe correspondent Maria Tadeo in Brussels. So we've just seen leaders arriving at the summit moments before. Certainly a lot of challenges remain, particularly on the economic front. Maria, how do they work through this?
Yeah, and Danny, yesterday you could argue was a celebration, that historic moment that the head of the Commission, Ursula von der Leyen, alluded to there. But today really is a sobering up as a result of the economy. And Danny, just picture the scene. We know that the European Central Bank, of course, is going to take rates higher. Inflation continues to be a problem. Yesterday we had that incredible language, we should really highlight the language coming out of Germany and the German economy minister, Mr. Habeck, where he says we're facing potentially a gas crisis. This could be a Lehman moment. And today, a lot of concern now, and a lot of officials don't want to say this on the record just yet, but behind the scenes, a lot of concern about Russia unilaterally at one point, as a result of politics, cutting off gas flows. And the reality is that we're still at a stage in which Europe is trying to bring up the storage, but of course that is still a challenge. They have the entire summer to prep for this, but they worry about the shape of the storage come September. And then of course you have the winter and the most vulnerable time of the year for European economies when it comes to that dependency on gas. So Danny, there is a lot of challenges here. It does seem like this is almost a perfect storm that's brewing for Europe, and for the time being, not a plan B that comes out of this meeting.
Maria, thank you so much. Bloomberg's Maria Tadeo there. Now coming up.
Buat jaga-jaga, hadapi situasi yang nggak pasti. Tetap jaga kondisi, Bear Brand, apapun dimanapun, bisa banget.
Coming up, British Prime Minister Boris Johnson suffers heavy losses in 2 special elections. We're going to talk UK politics with Sir Vince Cable next. This is Bloomberg.
Dengan satu gigitan saja, nyamuk penyebab demam berdarah bisa mengancam. Gunakan HIT. HIT, bunuh nyamuk penyebab demam berdarah seketika.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Unconditional commitment. Jay Powell again vows to beat inflation, while Fed Governor Michelle Bowman backs another 75 basis point hike. Stocks and treasuries move higher. Historic step, the European Union grants Ukraine candidate status while EU leaders devise strategies to weather Russia's gas supply cuts. German business confidence declines as the nation faces energy constraints. And double defeat, UK Prime Minister Boris Johnson suffers heavy losses in two special elections as the chair of his party quits. We'll speak shortly with former Lib Dem leader Sir Vince Cable. Good morning, happy Friday, and welcome to Bloomberg Surveillance. This is the early edition. I'm Danny Berger in London. Well, let's stick with that UK story with Boris Johnson suffering two defeats in special elections. The results raise questions surrounding the Prime Minister's election-winning potential. Oliver Dowden has resigned as the party's chairman, saying this morning, we cannot carry on with business as usual. For more, we're joined from Westminster by Bloomberg's Laura Wright. All right, Laura, how bad is this for Boris Johnson?
It's been a terrible night for the Prime Minister, Boris Johnson. Voters expressing their discontent with the government at the ballot box. It's why the resignation of Conservative Party Chairman Oliver Dowden is being viewed as a distraction from the real problem that is Boris Johnson. If we break down the details, Wakefield and Yorkshire returned to Labour with a 12% swing. It was one of the red wall seats, if you remember, that the Conservatives claimed back in 2019 with a Get Brexit Done mandate. In Tiverton and Hoverton, Devon, that result in particular is being seen as a political landslide. It's been a Conservative seat all the way back since 1920, and the Lib Dems have overturned a 24,000 Conservative majority, the largest Conservative majority to be overturned in by-election history. These losses, Danny, fueling rumours that Conservative MPs are vying to organise another vote of no confidence in the Prime Minister ahead of the usual 12-month gap from the last, which took place in early June.
Laura, we had some data also out early this morning on UK consumer confidence. There's concerns about the cost of living crisis. How is that impacting the political landscape?
UK citizens' incomes are being squeezed, and as you mentioned, UK consumer confidence data out overnight reached a record low, -41. To put that in context, -30 is typically a bearish recession indicator. UK inflation earlier this week at a 40-year high. Real wages are falling, purchasing power is being diminished, the economy is grinding to a halt. And interestingly, a recent poll from YouGov shows that if a general election were to be held today, the opposition Labour Party would have a 6 percentage point lead. But don't underestimate the Prime Minister, Boris Johnson. Danny, they say he makes a cat with 9 lives look mortal.
All right, Laura, thank you very much. Laura right there outside of Westminster. Let's dig into this more. We're joined by Sir Vince Cable, former leader of the UK's Liberal Democrat Party and former Secretary of State for Business. Thanks so much for joining this morning. We have to start with this remarkable and historic set of results in Tiverton and Huntington. So you have your party win a swing of 30%. Is this something that can be replicated elsewhere in the country?
Well, it's already happened twice before. This is the third in succession of spectacular by-election wins in areas where the Conservatives and the Lib Dems are the two parties in contention. So there is already a pattern. And it's partly deep unpopularity of the government, partly the Dems have a good record in local campaigning, but also, and highly significant, the fact that Labour voters are voting tactically for Liberal Democrats where they think we have a chance of winning. And that is something that could well carry through to a general election.
I mean, just how extreme you say, okay, it's already happened before, this is just another instance. How many other Tory seats are you eyeing?
Well, there's a list of, I think, 40 target seats. That may be ambitious, but indeed after yesterday, maybe not all that ambitious. But certainly in the suburbs of the big cities, not just in the south, but Manchester, Stockport, in the southwest of England, where the Liberal Democrats have traditionally been strong. Yeah, there are different parts of the country where we could well break back to the position of strength that we had a decade or more ago.
So I know you've said previously that perhaps the Tories losing these seats were a bit baked into the price. But does the extent of loss, does it tell us anything about Boris Johnson's appeal? Has he lost that ballot box appeal?
He has, but he's a skillful politician, and David Cameron's description of him as the greased piglet probably is fitting. I mean, he does get out of scrapes. I'm not sure. I think the Tories are beginning to panic. You know, this idea of changing their rules so they can have a fresh leadership election.
Do you think they'll do that?
Well, they're talking about it. I mean, the problem they have is that, quite apart from Boris Johnson's personal failings, which were clearly a major part in the results yesterday, is that the economy is deteriorating and there's no obvious end in sight. You know, we haven't yet begun to see the impact of the likely slide in sterling, which is almost certainly going to happen over the next few months. There's the Russian gas squeeze that happened last week that is going to feed through into even higher fuel prices than we had expected. We've got the impact of, Britain being the weakest of the G7 countries in terms of growth, expecting this higher interest rate recession. I mean, all this is terrible news if you're an incumbent government, and whether they stick with Boris Johnson or get somebody new, they're going to face this tsunami coming towards them in the latter part of this year and beginning of next year.
Well, you've written about before, spoken about before, this idea of needing to have a sacrificial lamb. I know you've spoken about this in the context of Rishi Sunak. We had Oliver Dowden resigning after these results is enough. Do those things go far enough if it is this tsunami that hits the UK economy?
Well, the Oliver Dowden resignation is not particularly significant. I mean, I don't think there'll be a great deal of sorrow for him. I mean, he was somebody who threw in his lot with the Johnson people, though he was initially a kind of reforming Cameroon. He changed sides, and he's paid the price for it. But I think the important question they will have to face is, could anybody do any better?
Could they?
And the awkwardness I think they have is that they have some people, Jeremy Hunt is a good example, who might have broader popular appeal, but are not popular with the party
Well, you
activists.
talk about this tsunami coming, and I do think this is an interesting question. What actually can be done? Because it's a global crisis we're facing, right? It's not just the UK. There's specific idiosyncratic issues here. But what can be done to soften the blow from these economic pressures?
Well, governments can't stop it because, as you quite rightly say, it's a global crisis. But I think a mixture of short-term palliatives, I mean, the idea that Ed Davey was talking about, of a general cut in value-added tax, which is disinflationary. If you're going to use the tax mechanism, a good way to do it. I think more to ensure that the really vulnerable people are not sucked into the kind of World Bank, the food bank situation, low-paid workers. A lot more could be done on the kind of universal credit improvement. And then I think the real problem with the British economy, and one of the reasons why we're in a worse position than many European countries or the States, is the complete collapse of business confidence. We just
had those numbers roughly low.
And, business investment is dire. It's been dire since the Brexit vote. It's getting worse, and business has no sense. A government that's moving from day to day has no kind of long-term perspective. We had, when I was in government, and indeed under the Tories afterwards, an industrial strategy. We had a kind of 5-year view looking ahead, and that kind of perspective is totally lacking, and it needs to come back.
Again, though, I have to go back to this idea that so much of it is about the energy crisis we're facing. It's about the war in Ukraine. I know we're talking about this in sort of the political context, but just how concerned are you about the UK economy in terms of a recession? Do you think that this is going to come soon, assuming we stay on this path? What are your predictions?
Well, there is a general problem affecting all major developed countries and developing countries even worse. True. But I think the UK, we're particularly vulnerable because of the way inflation is relatively high, growth is relatively poor, and I think even people who are not partisan, as I am, are predicting that we're going to get into a recession later this year, beginning of next year, and unfortunately with worse to come. I mean, this is the awkwardness. One of the possibilities that people do need to think about, I mean, I'm not predicting this, is that the Tories might actually risk an early general election because they know so much trouble is coming. And if you've got a new leader, it would be an obvious thing to do.
Isn't that really risky at this moment,
It's
though?
highly risky, but it's
it's
the kind of thing Johnson might do. He's a risk taker, he's a gambler. And if they got a new leader who might try to replicate what John Major did, 1991-92, fresh face, looking for a new mandate, and the Labour Party did well in Wakefield, a good result, sure. But it wasn't spectacular. It's not the kind of swing you would expect as sort of Tony Blair enjoyed back in 1997. So if I were doing a bit of forward thinking, I would factor in the possibility that, however implausible it seems this morning, the Tories might see advantage in a quick run to the electorate in the autumn.
I know you say you don't want to make predictions, but I have to say, you said around in May time that we might see a fight picked with the EU over the Northern Ireland Protocol, and about a month later that did indeed happen. And you said this sort of in the context of the minister trying to shore up his authority. So that's already happened. Do you expect more to take place in terms of Brexit as Johnson faces these issues?
Well, his style is very much to look for these wars, conflicts, which give some short-term advantage. It's not obviously working for them, but they're very strongly tempted to do it. Brexit is one of the few things that unites this government, as we discovered yesterday with the analysis in the economy. It's almost certainly not been good for the UK. It's a slow puncture that's doing long-term damage, but nonetheless, politically, for Johnson, it's his one achievement with his own supporters. So they're going to look for little fights. The danger, of course, is that it doesn't just creating division in the UK, but it's antagonizing our American friends who Biden hates all this stuff, doesn't want conflict with Ireland. So the government, I think, has been rather foolish to do it, but if they may feel they're getting some short-term traction with their own supporters.
Okay. Vince, I'm afraid we're going to have to leave it there, out of time. Sir Vince Cable, former leader of the UK Liberal Democrat Party and former Secretary of State for Business, thanks so much for joining us. Now, coming up, venture capital's diversity problem. We're going to be joined by Rick Lewis, chair of Impact X and owner.
Nyamuknya banyak. Benar, ada Heat Expert Dual Mode. Baru, Heat Expert Dual Mode dengan dua pilihan. Mode Express untuk perlindungan 2 kali lebih kuat, mode normal untuk perlindungan semalaman. Heat Expert Dual Mode, mode Express dan normal.
And owner of Britain's largest black-run business, to discuss underrepresented founders. This is Bloomberg.
Expert Dual Mode. Baru Hit Expert Dual Mode dengan dua pilihan. Mode Express untuk perlindungan 2 kali lebih kuat, mode normal untuk perlindungan semalaman. Hit Expert Dual Mode, mode Express dan normal.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. Let's get to your Bloomberg Business Flash. With that is Alice Adkins. Hi, Alice.
Hi, Danny. Wall Street's biggest banks are set to return tens of billions of dollars to investors after passing the Fed's annual stress tests. The bank showed they had enough capital to handle a cocktail of surging unemployment, collapsing real estate prices, and a plunge in stocks. More than 30 lenders were tested by the US Central Bank. Bloomberg has learned that Deutsche Bank's board has agreed to take a pay cut after criticism over the widespread use of private communication channels like WhatsApp among staff. The lender is among several firms under investigation by US authorities over the use of private messaging that can't be archived. Top execs at the bank are set to see a €75,000 cut to bonuses. Netflix has laid off another 300 employees as the streaming giant seeks to bring costs under control amid uneven subscriber growth. The job losses, which represent around 3% of the workforce, will mostly affect workers based in the US. The company is retooling operations after losing 200,000 subscribers during the first quarter. Bloomberg has learned that Tesla is taking steps to ramp up output at its factory in Shanghai. The electric vehicle maker will partly suspend manufacturing until early August so it can upgrade production lines. Bloomberg sources say the move will push Tesla's output in China to more than 1 million cars a year from the previous capacity of 450,000. And that's your Bloomberg Business Flash. Danny?
Alice, thanks so much. Now, let's get to one of our top stories today and the equality story. Rick Lewis is the owner of Britain's largest black-run business, Tristan Capital Partners. It's a London-headquartered real estate investment management boutique. Now, his charity Each Day, Every Day helps with disadvantaged students with their higher education costs and is supported by the British rapper Stormzy. Now, Rick also chairs Impact X, a venture capital fund that supports underrepresented founders. And Rick joins us now. Rick, good morning to you. Thank you so much for taking the time this morning. I want to start there on Impact X. Look, it's a conversation we frequently have that minorities, underrepresented populations struggle to get funding. But of course, you're on the ground, you're looking at the day-to-day lives of this. Just how bad is the problem? Has it improved at all since you've been working with Impact X?
No, sadly, it hasn't, Danny. I mean, we thought sort of after George Floyd and the Black Lives Matter movement that it was going to improve. But like, if you look at the numbers, they're horrible. 1/4% of all VC funding has gone to black entrepreneurs. and 0.2% has gone to Black female entrepreneurs. That's after the upswing in sort of social conscience that we were going to change this balance, and the initiative on the part of so many organizations to put themselves out there to attract this funding. Really well qualified teams looking for capital are still not getting it. And I'm at the coalface of it, so I can tell you that the numbers look bad.
There does seem to be, in the wider VC space, Rick, this reckoning that's happening. Folks paid up a lot, valuations were elevated, and now some of that is starting to come down. What does that mean in trying to get funding for underrepresented founders in this current, again, rethink of the VC space?
Yeah, I don't want to be pessimistic, but it's not good news. As values are coming down and marks are coming down, there's going to be a smaller pie, and then people are going to be forced to make harder decisions about what they want to back, which funds and initiatives that they want to put capital into. And that means the already bad or difficult decision that they're not putting capital into underrepresented, underchosen founders is going to become an even tougher choice.
Let's extrapolate that to the wider economy. You, of course, also have Each Day, Every Day. We spoke about that in introing you, disadvantaged students, helping them with higher education costs. What about the wider economy, the downturn facing there in terms of minority populations?
Yeah, as the challenges to the UK economy increase, the cost of living increases, amplifying inequality among our population. The hard facts are that it's not a level playing field when it comes to economic opportunity and economic employment and quality of opportunity. Unemployment rates are consistently higher among Black and minority populations, and wage rates are lower. That disparity looks to get worse, unfortunately. What we're trying to do is that we believe that education is one of the most potent and productive pathways to demonstrable social change, equality, and greater productivity among our population. And our foundation, the Black Heart Foundation, has been providing both capital and resources, coaching and mentoring to young students in underrepresented populations through our Black Heart Scholars Program. Since 2013, we've endowed over 500 scholars at 125 colleges, universities, and programs across the UK. But what I can tell you is the need's getting even greater. Our applications doubled in the last 12 months and probably 4 to 5 times higher in the last 3 years.
I have to say, you do see some asset managers, some private funds, well, many of them acknowledging the issue in terms of inequality in the world. A lot of them, hire an impact chair. They start an impact fund. I wonder how real and how effective these types of efforts are, Rick. I mean, are we going to have a situation where, the greenwashing debate that's happening right now, we sort of refocus that and perhaps say, look, there's also diversity washing going on?
I want to be polite but direct. The truth is that the pendulum did swing in a positive way to people thinking about these issues and trying to take the first steps of coalescing some of their organization to address them. But the truth is the capital, the movement, the impact hasn't happened. It's starting to happen. And now, as there are bigger exogenous events, the economy is starting to weaken. There's a bunch of reasons and rationale to forget about those initiatives and stop doing them. I can just tell you that the need isn't getting smaller, it's growing.
All right. Well, Rick, we can't have you on without talking about real estate. Of course, that's what you do at Tristan Capital Partners. We're talking about sort of this concern about the economy, this doom and gloom. Take me to what that means for UK real estate. When you did have a weaker sterling, you had, outside money coming in, international buyers, you had pay rises coming in through the finance sector. So you did have this positive environment. What happens now that, again, we're looking at this economy that looks like it's on the precipice of turning or perhaps is already there?
Yeah, we did have some really positive traction, and there are still elements of that in the economy. There was a great way to capital moving into alternatives and moving into real estate into our space. We had started to return to work and return to economic activity. We could see that across our entire portfolio. So things were starting to be optimistic. But with the economy starting to change, interest rates going up, you can start to feel the beginning of a pause. Certain trades in sort of our space are slowing down. Some would say that if you're organizations like us that have conviction and capital and been around a long time and have a great network across the marketplace, that will be an opportunity, but there's certainly a little bit of rough patch before we get to the opportunity, and we're in the middle of that right now.
Rick, just quickly, has the sort of return to office narrative, has that normalized yet?
Yeah, I think it has. I mean, I think that there was a great concern that we weren't going to need any of the office space out there in the world, and that just hasn't been true. What we've seen is office rates for the best qualified sort of non-obsolete offices going up. So occupancy's gone up, and lease rates have gone up. The weakening in the economy will dent that a little bit, most certainly. But the story that the death of office was imminent was overplayed and has turned out to be untrue.
Rick, really great to catch up with you this morning. That's Rick Lewis, chairman of Tristan Capital Partners and Impact X. Now, coming up, we're going to dive back into the market story. Jay Powell vowing to beat inflation. Fed Governor Michelle Bowman backs another 75 basis point hike. Bonds, yields, those continue to drop as equities rally. More on that next. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now let's get a quick look at the markets as we close out the hour. European stocks continue to rally. Again, it's this rethink of the inflationary story. You've had metals, you've had oil, all of them coming in. I should say, you'll see at the bottom of your screen there, oil is moving slightly higher. However, it did fall more than 11% in 5 days at one point. So again, if commodities are turning, is it a sign that the inflation fight coming from the Fed is finally starting to take hold? It's not unreasonable then we see a rethink in rate pricing. This is across the world. You're looking at two-year yields, be it Australia, Canada, US, UK, Germany, all of them collapsing this week. A move into not just yield, not just bonds, I should say, but really haven assets in general as we have this recession discussion. However, is it what the Fed wants to see again to get inflation into check? Aussie bonds, those falling more than 40 basis points over the week. Two-year yields in the U.S., those down more than 20 basis points. Well, Bloomberg Surveillance Early Edition will continue in the next hour. Matt Miller, Kaylee Lyons, and Anna Edwards have that for you. This is Bloomberg.
the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
It's unconditional. Our commitment is we really need to restore price stability, get inflation back down to 2%.
I think there's a notion of a wage price spiral here.
We need to make sure that we have enough oil and gas in the economy now over the next several years to meet the demand that we have in the economy.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, June 24th. Our top stories today. Moving in different directions on guns, the U.S. Senate passes a bipartisan gun safety bill by a wide margin. That happened hours after the Supreme Court issued a landmark ruling that could lead to more firearms in the streets of big cities. A warning for investors from SocGen. If the past 150 years of financial market history are any guide, the S&P 500 may have another 24% to fall by the end of the year. And a major election upset for Boris Johnson. His Conservative Party suffers a double blow in regional by-elections. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. The conversation in here in London, Kaylee, then sidetracked, distracted a little by the politics. But from the market's perspective, bad news seems to be treated as good news right now as everyone tries to second guess the Fed once again.
Yeah, at what point is the Fed actually going to have to pivot back toward easier policy if they're too aggressive on the tightening and we see a slowdown in growth as a result? You're trying to see the bond market price that in, which is why we've seen yields coming in really across the world. And that has given a lift to equities. At least that was the case in Asia overnight, where the MSCI Asia Pacific Index was up about 1 percentage point. But really the move was led by Chinese technology stocks. Again, sensitive to the rate story. The Hang Seng Tech Index was up about 4%. As for that rate story, we see yields coming in again around the world, but it has been really dramatic in Australia this week. I'm talking double-digit basis point moves basically every single day. Today, the 5-year yield down 14.5 basis points, back down to 342. Finally, I would just note that the dollar is weaker against the yen, or the yen stronger against the dollar, for a third day in a row. It is a small move, but really reflective of that haven bid, lifting the yen off of its weakest level since 1998. Right now, dollar yen trading just south of 135, Matt.
All right, so coming back in a little bit, I'm looking at futures that are rising again. Well, I should say rising after a gain in the cash trade yesterday. Right now, up 2/3% in futures. The cash trade, we were up almost 1% on the S&P. It was mostly defensive stocks that rose yesterday, but some tech names, Amazon, Apple, Microsoft, really leading the gains. And tech is what's leading the gains today around the world as well. U.S. 10-year yield coming down as investors buy that debt right now, 3.08. And I keep saying this, but you know, just a couple of weeks ago, we were up at 3.50. So we've come in more than 40 basis points over the past couple of weeks. We've come down about $20 over the past week and a half on oil. We're up today right now, 75 cents to 105.02. But just last Tuesday, we touched 124 in intraday trading. So really interesting moves there in commodities. And then Bitcoin, of course, up right now with futures right now at 21,058 from midnight. So gaining in correlation with other risk assets. Anna, what do you see in terms of European markets?
Yeah, European equity markets then playing a little bit of catch up with the US, but also looking ahead to the US trading session, no doubt, and seeing some positivity. So we're up by more than 1.4% on the French market in particular. The DAX also up by 0.6%. So a bit of positivity, maybe that retrenchment in yield that we've all been talking about, maybe that giving a little bit of room at the margin for stocks to go a little bit higher from here. Let's have a look at what else is on the move on European markets this morning. And we've got the bond markets in focus. We've mentioned what's been going on with yields. We have seen some appetite for bonds of late, things turning around perhaps a little bit at the short end of the 2-year curve here in France. We see some bond selling happening there and those yields going a little bit higher. This is the natural gas price down by 1.5%. This is the European benchmark. And even the IFO Institute acknowledging we could see a recession in Germany. A lot of talk about where the German story goes next, how they managed to secure supplies of gas, and whether we will see a restart in the pipeline that's going to be taken offline during July, whether it will be restarted afterwards. That's something that the German establishment coming to terms with. What would happen if that pipe were not restarted after maintenance in July? This is the pound, 122.74 against the US dollar, so up 0.1%. Losing earlier gains, though, Kaylee. We saw retail sales numbers coming in and some revisions to last month that weighed on sentiment. We saw the consumer sentiment picture looking the worst that it's ever been. And so as a result, a little bit of weakness came through in the pound, or at least it lost some of its earlier gains. The politics also in play for the moment on the sidelines when it comes to the pound. Zalando is down by 12.9%. This is a retailer in Germany, an online retailer. It's taking other online retailers and fast fashion names down with it today. A profit warning came through, Kaylee, from Zalando, and some analysts in this sector warning that expectations for this sector in an environment where consumers are squeezed are too high, and so we should expect to see further downgrades coming through, Kaylee.
Yeah, it raises the question of whether expectations are too high broadly, because given all the pain we have seen in equities, you haven't seen analyst earnings estimates coming down to the same extent. There's a little bit of a gap there. Now let's take a look at what is ahead today. It's Friday, but we still have a ways to go until the end of the week. It is the second day of a historic summit of EU leaders in Brussels. We'll be live from there in just a moment. Plus, we'll be getting more Fed speak and hear from Fed Governors Jim Bullard of St. Louis and Mary Daly of San Francisco. And finally, the big economic data point to watch today, 10 a.m., we get the final print of June's UMich Sentiment Index. How much will the surge at the pump weigh on consumer sentiment, Matt? And what do those inflation expectations look like? Because we know the Fed is paying close attention to those.
Consumer sentiment, as measured by the University of Michigan, is already at an all-time low. Now, let's talk about what's going on in Washington. It's being called the biggest breakthrough in U.S. gun safety in 3 decades. The Senate voted to approve bipartisan legislation that will beef up background checks, secure schools, and give states money to fight gun violence. Emily Wilkins, Bloomberg government reporter, joins from D.C. for more. Emily?
So yes, we saw this bill pass the Senate last night with a pretty good-sized margin. You saw 15 Republicans join Democrats in this vote. The bill is now going to be voted on in the House today. That's expected either this morning or early afternoon. We're not expecting to see as much bipartisanship there. We know that Republican leaders in the House will be whipping against the bill, certainly a change from what we saw in the Senate with Mitch McConnell backing it. But that bill is still expected to pass and to make it to President Biden's desk. And yes, this is a bill, if you look at the last 30 years, this bill is being hailed as one of the biggest when it comes to gun control measures. But you also have Democrats caveating it with it's still not enough. They want to be able to do more. You heard from Senate Majority Leader Chuck Schumer, who said that the reason that Democrats are behind this bill is because they could surrender to gridlock, or they could choose to try and forge a bipartisan path forward.
Well, and Emily, what a day for this bill to be voted on, because it was passed in the Senate just hours after the Supreme Court struck down a New York law that limits public handgun carrying ability. We heard from New York City Mayor Eric Adams speaking about this yesterday. Just take a listen to what he had to say.
The opinion claims to be based on nation historical past, but does not account for the reality of today. It ignores the present, and it endangers our future.
So, Emily, obviously this was a very high-profile ruling from the court, and it comes as we're also awaiting a ruling from the court on abortion that actually could send the power back to the states, where the court said in this case the states can't have the power to choose on their own. There is a federal constitutional right here. What is the feeling in Washington this morning about the high court?
I mean, there's certainly a question about what's going to be coming next. I mean, I think to a certain extent, a lot of people are expecting to see more restrictions on abortions with the Roe ruling. I think there was also not a huge surprise in D.C., given the conservative makeup of the court, that the ruling came down this way on gun laws yesterday. I think the question is now, where do we go from here? And you saw Mayor Eric Adams allude to it a little bit, and you also saw it in some of the opinions that justices wrote, that now there are questions about exactly how far states and localities can go on concealed carry laws. You saw Justice Kavanaugh, Justice Roberts note in their opinion that it's possible for states to limit who has concealed carry. It simply needs to be the same standard for everyone across the board. And Justice Stephen Breyer also mentioned in his opinion that you also need to look at how cities should regulate areas where people gather in large numbers, like movie theaters, concerts, some of these areas where we have seen mass shootings. So I wouldn't expect this to be the last that we've heard on this particular debate on concealed carry, but this is certainly breaking new ground, with the Supreme Court weighing in for the first time on carrying outside the home, which has been an area that they've been really reluctant to touch in previous decades, but you are seeing this new, more conservative court go ahead and take on some of these issues.
Emily, thanks very much. Emily Wilkins of Bloomberg Government with an important update there from Washington. Back to the markets, the S&P 500 index may have another 24% of fall by year-end. That's according to SocGen, based on the past 150 years of financial market history, they say. Bloomberg's Danny Berger has been poring over the details. Danny.
Yeah, Anna, this comes from the quant team, and you know I love me some quants. It's an interesting argument and thesis to hear, especially today on a day when stocks are rallying, perhaps due to the concern about the economy and what that means for the Fed. But basically, looking at this wide set of data, they argue that from the peaks, the fair valuation of when we enter into a crisis period and come out of it is far lower than where we are now. Indeed, they say that from the January peak, we needed to fall about 40%. In percentage point terms, we're about halfway there. So it's not necessarily about valuations of this market. It's based on past crises valuations as well. And look, part of the conversation is perhaps we haven't fully capitulated, and that's why we're not as low as where SocGen thinks we will be. Perhaps we'll get there. There are signs of pessimism. For example, Bank of America says that through Wednesday, there were outflows from equity funds, the most in 9 weeks. So there certainly are concerns there. But again, that came before markets started to rebound. So how much further do they need to go to fit, in the opinion of SocGen, that sort of post-crisis valuation?
Well, Danny, you mentioned signs of pessimism. The bond market clearly reflecting pessimism on the growth story, and that we've seen yields coming lower, including at the short end, even though in theory that should rise even further due to expectations of Federal Reserve hiking. We heard from Bill Ackman overnight saying that the bond market is misreading the Federal Reserve.
Yeah, 2-year yields coming in 20 basis points this week. It certainly feels like this really momentous about face. But yes, Bill Ackman saying, I think the bond market is misreading the Fed. This is likely due to Powell's communication style and some wishful thinking on the part of investors. Inflation is out of control and inflationary expectations have become unanchored. So his argument, not necessarily that we're just overly pessimistic, but it's about Powell, that perhaps the bond market always interprets him as dovish whenever he goes off script. And that's why we've seen this change in pricing. I don't know. I mean, who am I to disagree with Bill Ackman? But it does feel like it's more inflation expectations versus reading Powell wrong. For example, break-evens, those have started to come in as we've had this decimation in the prices of commodities. So the market is sort of turning on that, not necessarily thinking that the Powell's going to back out, but more perhaps that Powell is doing what he wants to do to slow down the economy to bring inflation in line. But Bill Ackman does say, look, just because we're talking of a recession doesn't mean that inflation is going to come in.
Well, and he makes a good point about even Kashkari backing 75 in July, and then other Fed governors coming out and supporting him. So maybe the market needs to get its expectations aligned with the Fed governors. Danny, thanks so much for joining us. Bloomberg's Danny Berger there out of London. Now, it's the second day of an historic summit of EU leaders in Brussels. Yesterday, both Ukraine and Moldova were granted candidate status for membership of the European Union. Georgia, meanwhile, was told it could win the same status if it meets certain conditions. Ursula von der Leyen, the European Commission president, spoke yesterday.
Of course, the countries all have to do homework before moving to the next stage of the accession process. But I am convinced that they will all move as swiftly as possible and work as hard as possible to implement the necessary reforms.
Maria Tadeo, Bloomberg European correspondent, joins us now from Brussels. So, Maria, leaders face challenging issues today on energy, on the economy. What can we expect?
Well, Matt, we did have a historic breakthrough. The head of the commission, of course, alluded to that candidacy status for Ukraine. Remember, that had been the centerpiece of the Ukrainian foreign policy for years. They had campaigned for the status candidacy happening yesterday, of course, endorsed by all of the European leaders. We should remind everyone, however, that being a candidate and a full member of the European Union is not the same thing, and the transition at times can take years. That's for the politics. But today, Matt, a lot of sobering up when it comes to the economy. And picture this. Of course, we know the European Central Bank is going to hike rates, but it's not clear that it's going to deal and bring down inflation. A lot of this driven by energy. And then yesterday, the comments from the German economy minister, Mr. Habeck, incredible language. He says Germany's facing now a gas crisis potentially, and that could be a Lehman Brothers moment for the energy market. To use that analogy, a Lehman Brothers market moment for energy. Now, a lot of the conversation today focused on that, but the issue here, Matt, is that, of course, Russia could cut flows at any time. The European storage is not ready for that. We enter the winter months, the most vulnerable time of the year for European economies. And when I ask sources here, what is the plan B? Well, the issue here is that they don't have one yet.
Maria, thanks very much. Bloomberg's Maria Tadeo in Brussels. Now to UK politics, and it's a double blow for the ruling Conservatives overnight, with two defeats in special regional elections called by-elections here in the UK. But while the results raise questions surrounding Boris Johnson's election-winning potential, the Prime Minister has vowed to carry on.
We've had some tough by-election results, and they've been, I think, a reflection of a lot of things, but we've got to recognise that voters are going through a tough time at the moment, and I think that as a government, I've got to listen to what people are saying.
Bloomberg's Laura Wright joins us now from Westminster, and we only just came through a no-confidence vote in the Prime Minister. He survived, of course, but damaged by that, Laura. Now these two damaging by-election results overnight, where does that leave him?
Well, it's been a terrible night for the Prime Minister, the Conservative Party losing two members of Parliament to opposition parties. And as you mentioned, this fuels speculation that another vote of no confidence will be held against the Prime Minister sooner than the usual 12-month gap from the last, which happened earlier in June. That raises the question over who would replace Boris Johnson. Favourites include Chancellor of the Exchequer Rishi Sunak or the Foreign Secretary Liz Truss. Look, in recent months, Boris Johnson has tried to portray the image of an international statesman, but he can no longer ignore the political turmoil at home. UK citizens' incomes are being squeezed, and overnight data revealed that consumer confidence has reached an all-time low, -41. To put that in context, usually -30 is a bearish indicator. It adds to a week where inflation reached a 40-year high. Real wages are falling, purchasing power is diminishing, the economy is grinding to a halt, and interestingly, a recent poll from YouGov revealed that if a general election were held today, the opposition Labour Party would be the winner, not Boris Johnson's Conservatives.
All right, Bloomberg's Laura Wright, thank you so much. Now let's go from politics back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. I have to begin with Zendesk, which is the big software company. It is surging before the bell on reports that it's close to a deal to be bought out by firms led by Hellman and Friedman as well as Permira. That stock is up 48% before the bell. You're also seeing a gain, although not as large of a gain, for FedEx, which reported after the bell yesterday. Its earnings beat expectations, as did its 2023 forecast. The company benefiting from the higher charges it's able to charge for packages. And some of those labor supply issues are easing. That stock is up about 3%. And finally, I mentioned how it was technology stocks in China that really led the way in Asia. So no surprise, those ADRs listed here in the U.S. are also moving higher. Alibaba, one of them, up about 3% before the bell, Anna.
Kaylee, we'll get back to the bond market conversation shortly. Coming up on this program, Ian Seeley joins us, JP Morgan Fixed Income CIO. Does he think we've seen peak yields for this year? Where do we head into the second half? And cracks in the ecosystem. How hackers stole $100 million in another crypto bridge attack. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
We are all unique. Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
Welcome back to Bloomberg Surveillance Early Edition. We are simulcast on both radio and television. I'm Matt Miller with Kaylee Lyons here in New York. Anna Edwards with us out of London. We have seen something really weird happening in commodities lately. You saw a huge jump in a number of different commodities, from wheat to oil, and now a lot of them have come off. Certainly oil, as I was pointing out earlier, is down almost $20 in just a week and a half. Now, is that due to recession fears? And what happens if we do go into a recession? Simon White is here from the Bloomberg MLive team to answer this. Simon, you've got a chart for those of our listeners